Greetings, Dr. Jeffrey Scott. This is my Market MRI Pro update for March 26, 2026. Well, the war continues and the sell-off follows. So we continue to break through support. We'll take a look at the markets as they sell off. For the most part, it's been an orderly sell-off, but it seemed a little worse today. And those peace talks, which I thought would have this over by Friday. I'm kidding when I say that. Seem to be very elusive whether they're occurring or not. Again, my name is Dr. Jeffrey Scott, marketmripro@gmail.com, and my Google group is Top Down Trader. As always, I do these for educational purposes only. Not that I'm going to recommend a lot of long stocks today, but anything I talk about should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk, and you alone are solely responsible for any investment decisions you make. My Google group is where I keep my mailing list, where I send out notifications when I post things, when I invite people to meetings. Occasionally we'll give discounts on my tools. Love to have you join. It's simple. All you got to do is go to Google Groups, sign in, look for Top Down Trader, and let us know how to contact you. And the best part is imagine a mailing list, which it essentially is, where you control. And that when you want to leave, you just leave. Hopefully not too soon. Know your news and earnings. On Thursday, actually on Friday, because this is Thursday. On Friday, we'll get no major news. Be interesting to see what happens. Right now, it is just after 6:30, so the futures are open, but only open for a little while. Hold on one second. Right now, we're showing the Dow up 108, NASDAQ up 64, E-minis up 17, and the Russell up 10. So some of that, I'm sure, is just a oversold bounce. Trump did come out right after the end of the market today and say that he was extending a pause on attacking Iran energy facilities through April 6th, and some comments about how they really want a deal. If you're in the data center complex, tough day today. AGX, though, after hours was up 9.8%. That might have some pull through on some of the others. U is up 13.8%. ACOG down 8.1%, all of these on earnings. On Friday, we got Carnival before the market opens. Not a whole lot going on. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For more information about my tools, educational services I have, or any questions, just email me at marketmripro@gmail.com. And if you own the software, boy, you got a big update coming. Praveen said he's going to push it either tomorrow morning or Saturday. I'll have to do a follow-up session because there's so much new there. Probably need to review it with you in a video. But if you have any issues, coding at marketmripro.com. This will be both an update of features and speed. All right, so let's start with the daily briefing. How bad was it today? Well, the volatility was only up 6.92%, well, up from an elevated area. That's no good. Finishing up at the high of the day. The dollar was up 0.4% at the high of the day. Bitcoin was down 3.36, a little bit off the bottom of the day. And then if you look at the major indices, they were down 1.04% on the diamonds, 1.74 on the Russell, 1.79 on the spiders, and 2.39 on the Qs, all finishing right at the bottom of their daily range. So pretty bad sell-off and closing right at the lows of the session. Interestingly, we turned positive on the new highs minus new lows on the NYSE, plus 10. Nothing to write home about, but at least it's got a plus in front of it, and still kind of negative, minus 99 on the NASDAQ. Participation was bad again, 38% of the S&P 1500 was up. 33% of the NASDAQ composite, and 33% of the NYSE. And when you look in each of those indexes at the sectors and industry groups, profoundly weaker than they were on, on Wednesday, the prior day. So another rough session in the U.S. markets. In the S&P 500 sectors, energy led higher. Utilities were up 0.18%, energy 1.5%. Real estate was kind of flat. If you look at the laggards, tech minus 3%, that's a big day down. Communications down 2.36, industrials 2.32. From a theme perspective, oil exploration and MLPs up at the top, and cybersecurity. And you may see a run on cybersecurity as some of the talk is that might be Iran's next approach to the war, is when they run out of drones. And if we look at where the weakness was on themes, copper, silver, cannabis, semiconductors, uranium, social media, gold, blockchain, clean tech, China internet, look how many things were down over 3%. It was a rough day. So we're already in a sell sign on the four uh, ETFs that I use for timing: the spiders, the Qs, the diamond, and the Russell. And there's no change here. We're nowhere close to flipping, although we did kept the bongo blue on the Russell, but you'd have to get above the 30-period WMA tomorrow. Um, you look at them and you can see in this relatively clean chart that lowest close, gosh, going back months. In fact, lowest close probably going back to August. Wow. On the spiders. Um, it didn't, I don't know if it, don't think it traded below that low. Let's see, the low here, the close was 644.82 and 644.72. So kind of not, it's too soon to be a double bottom, but pulling it to the same level as it did earlier in the week, or last Friday rather. The Q's taking out support. Diamond's not there yet, and the Russell not there yet. Weeklies are also remaining in a sell signal. Nothing's changed there. And I don't think the monthlies will have enough to change, but notice what's happened here. We've lost the bongos on everything but the Russell, meaning that if there was a sharp turn down and took out the WMA, that would be enough on those three to turn them to a sell signal. It is not pretty out there. If we look more in depth at the U.S. indexes on the dailies, let's just open them up. And, the 200 has become a problem. And, I guess we were bear flagging and we broke down again on the spider. How low will it go? We're, oh, I always mess up the fibs, but let's just do it anyways. So we've pulled into the 23.6 or whatever this one is. Here's the 38.2 and here's the 50%. God forbid we get down there. Wow. This market is not happy. Anything bullish on this, except for the fact that when you get the high-low jump down to minus 100 is when things start to happen as far as bounces go. But boy, even a bounce, we'd have to get above that 200. Right now, it looks like we're taking the low road scenario. I see very little reason to be long stocks right now, except for the who knows what we'll have on True Social before we wake up phenomenon, which makes it hard to be short. The Qs all the way back to this level that they breached back here in September, broke through the lows from November, well below the 200. Really looks a lot like the spider in that even a big bounce, it's going to have to get above that 200. Seasonality is coming into play favorable, but boy, got a lot of work to do to become bullish on the Qs. Diamonds, same thing. It keeps failing at the 200. And again, kind of setting up a little bear flag before the next leg down, perhaps. It's going to take some type of a catalyst coming out of Washington, the war or something to turn it around. Now, the Russell hasn't broken the 200 yet, so it's the star, but it can't break above the 100. It's failed multiple times. So this is the best of a bunch of bad. Volatility closing up again. Are we going to have another one of these days where we open up much higher, reverse lower, and that's it? Probably need a high volume capitulation at some point for that to happen. Maybe that's what's coming up in the next couple of days. And then the dollar, yeah, it's kind of up high of late, sort of consolidating at a higher level. But remember where it's come from. So nothing bullish there, folks. I wish to say there was, but nope. Further breakdown today in gold, tried to get back up to the 100, was down 3.76. Silver, same thing, failed at the 100, down 6.81. It's rough. Oil holding up. When war on, oil up, war off, oil down. And, with the, it's kind of like we are speaking different languages. We send them a 15-point plan. They send us back a response of 5 points. You would think they were winning the war, meaning they being Iran. Um, they got work to do, I'm afraid. But you can see oil gapped up 3.41%, a bit of a doji appearance to that. Natural gas, in the U.S., it's not doing much. If there was a way to package that natural gas and get it to Asia or Europe, it's worth 10 times almost what we charge for natural gas here. And then you could see rip to the upside, 10-year closing at 4.41, up 1.89%, and the 30-year closing up 0.82 at 4.94. So dollar up, oil up, 10 and 30-year up, markets down. Not a great session. Not a great session at all. If we look at some of the breadth indicators, are we any close to a reversal? Look, we came up enough over the last couple of days that the buckets, nothing's above 10%. So still weak, still mostly below the midline with that left shift, but nothing that says we're about to bounce. We look at the market breadth. You could see that the stocks above the moving averages have come off their lows. Both of them, let's spit that out a little bit. There's a data error on the NYSE from yesterday that's going to hopefully be resolved by the data provider. And we don't have the volume yet on the NYSE. NYSE had a rough day, down 1.28. NASDAQ was down 2.38, and the biggest difference is you're still above the 200 on the NYSE, but not on the NASDAQ. On the NYSE, kind of a positive, new high, new lows, barely. Everything else is negative, which means a new high, new low, AD lines and up, down on the NASDAQ. And the NYSE, the AD line and up, down volume. No new signals down here yet. There are one of the cool things about the things that I've learned from Ian Woodward and we've incorporated in the program. There are a number of things that we expect to see at a bottom. Not going to go through those today. We might have to do what does a bottom look like video coming up again. But you'll notice these things here, we don't have them over here, except for this bingo, which was a baby out with the bathwater a couple days back. Just a sign of how bad the sell-off is. Just look at the extended market breadth just to see the 13-week new high, new low, no signals, 0.52 on the spiders, 0.49 on the S&P 1500, 0.25 on the NASDAQ, which is not low enough to consider a signal, and 0.37 on the Russell. So we really have a mess, and we're not extended enough to the downside that we can rely on technicals to give us a bounce. Could get technically oversold with another day like today, or maybe something happens before we wake up tomorrow. But right now, it's kind of a very difficult market. If we look at, and one of the hardest ones that I can remember, at the ratio charts, the strength in the market really is energy. Materials have picked up some. Technology's been weak. Healthcare's maybe turning around. Um, but it's really been a story about energy. If we look at some of our mag stocks, and I like to look at these because there's so many people own them. And look, I own some of them in my long term. I got one in my short term. And yesterday we talked about how the one in my short term failed at this trend line, and I wouldn't be buying it here, and it failed it again today. So Amazon maybe break above the trend line, but Amazon and certainly get back above that yellow line to enter a new position. We'll see if I close it out before the end of the day tomorrow. Apple pierced the yellow line. I'm out of this until it closes above the yellow line. Google, ditto, breaking down. Is that today's? Yep, that's today. That was yesterday. Yeah, Google's breaking down like everything else. Meta, oh my God, Meta got hammered. I guess this is a response to the two court cases yesterday where they lost in jury trials and could stimulate some lawsuits across the country. But Meta taking a big hit. Now, how often do you see Meta hit a minus 100? This thing's due an oversold bounce. We'll see if we get it or not. Netflix, probably the best of the bunch right now. It's above the yellow line. It had a pullback after somewhat of a recovery after the Warner Brothers related sell-off. Um, it in itself, it's not great, but if you had to pick one to buy so far, I'd probably buy Netflix. Right now, I wouldn't buy any of them. Tesla, kind of like Apple and Google, I'm not buying it until it breaks above the yellow line. And then we got Nvidia. I'd say the exact same thing. Is it about to squirt out of the box? You could be short here. I could understand that, except for the factor that we could get a tweet in the morning. But Nvidia, we'll see if it violates the box or not. Microsoft, it just every day it gets worse. It's not helping the software stocks, and it's not helping itself every day. Another day down. No buy. Labu kind of closed where it closed yesterday. It's at least interesting. If there was one place of the market that looks like it's turning around, it's biotech, but that could be short-lived. It had a couple of good days because, hey, biotech had a couple drugs approved, you had an acquisition, and those are the things that move biotech. Um, maybe okay. I'd like to see it move up above the yellow line. Software breaking down, data centers breaking down, Shield, the defense stocks breaking down. Wow. All right. So we're not even going to look at longs today because I think you got to be nuts. Oh, that sounds horrible. I think you got to be the smartest person in the world and know more than the markets do to be going long here. Now, the reality is you can't buy stocks unless you buy them in the pre-market until tomorrow morning at 9:30. By that time, you'll see what the futures are. You'll see what the news is. And if we wake up and we see a positive thing out of Trump and the futures are up 400 or 500 points, I'll bet you $10 that the market sells off during the day and it could still finish up. I just don't see us on a Friday um, to take that news unless there's really a peace treaty and go to the moon and back. So I'm not even sure I would buy it even if we're up in the morning. But, you know, this isn't investment advice, it's just my thoughts. Um, but I hope it's up because I still got a few longs to get rid of. Um, what else would I say? Would I short the market here? Yeah, I think you're going to make money to the short side, but you got the issue with the Trump social, Truth Social, also previously known as tweets, that we've got to deal with. And this war is going to come to an end and the market's going to rally. It's a tough market. It's hard to buy, it's hard to sell. I had a call today, or a call, somebody texted me and asked me what I thought about Contras. And I think Contras are great here with the caveat of I'm not sure I'd hold them overnight. And will you get ruined by a tweet? And I think you got to be careful. I'm calling it tweets. I don't know what you call it. A truth when it's posted on Truth Social. All right, let's look at, let's go into the JS layout. You know, it was a brutal day. I still own some SanDisk when the morning day opened. A paper came out that Google's got some new way of stuffing a lot more data into less memory, and that maybe this issue of supply of memory is going to go away. And so SanDisk was down big. Interestingly, that it um, pulled all the way down to 50. You know, if I had to be a buyer or a seller, those things are great. Think about DeepSeek, how it what it did to NVIDIA, and then it turned out to be not yet. You know, Sandic may become a buy here, but you got to let it stabilize. Um, Micron, gosh, when I went to a seminar earlier this year, and all they talked about was how great Micron is, and I love Micron. I'm a sucker for their fundamentals, but you want to own it here? You know, it's probably going to bounce, but you don't know where. It's a tough market. So, what about those contras? Yeah, you want to see pretty charts? Dog, this goes up when the diamonds go down. Retest of the 200 it held. It's probably going to go higher if this, unless some news event occurs. I could see people being in dog. Financials led us to the downside. Um, Here you have a bit of a flag forming, and maybe it breaks out tomorrow. Look at the seasonality of short financials. SOXS. It doesn't look like much, but remember what I showed you before, financials were down over 3%, or not financials, semiconductors. Um, Kind of still in the base, hard to see the breakout here. SPXS will go up when the S&P breaks down. It's starting to break out. SQQQ goes up when the Qs break down. All these are now broken over the 200. TZA is when the Russell goes, and we've seen the Russells held up the most. So the Russell isn't running yet. So yeah, I mean, if you want to participate in the market, I have nothing wrong with contra ETFs, not giving you investment advice. But the problem is, it's this guy in the White House with the orange skin color and orange hair that you never know what's going to happen. And you know, you saw the futures are up now because of a Truth Social post. I think we have to be wary to both sides. So to me, when I can't tell you it's great to go long or great to go short, I like looking at my Thinkorswim account and seeing that I'm mostly in cash. And right now, I think cash is king, and I'll have plenty of time to get in when the market tells me. Now I'll have more cash likely by the end of day tomorrow. I've got a few things that have held up, and the things that are of size that I have left out there have put protection, so they're just the same as cash. Have a great day in the market on Friday, great weekend. I'll post something probably on Saturday. And you can tell I'm actually feeling better and my voice is better. Take care, everybody. Now we just need the market to get better.